Bank Equities welcomes you all to the Q1FY21 conference call of Solar Industries India Limited. The management is represented by Mr. Manish Nuwal, Managing Director and Chief Executive Officer, Mr. Nilesh Panpalia, Chief Financial Officer, and Mr. Suresh Menon, Executive Director. I now hand over the call to the management for their opening remarks, post which we can take questions from participants. Over to you, sir.
A very good morning to all the shareholders and potential investors. I would like to start by saying that I hope you, your friends and family remain safe and healthy during this unprecedented global health crisis. As always, I would like to remind you that during the call, we might make projections or other forward-looking statements regarding future events and about future financial performance. Please remember that such statements are only predictions. Actual events or results may differ materially, and our website will be updated with all the relevant information from time to time. Now, I would request our Executive Director, Mr. Suresh Menon, for his comments on the company's performance for this quarter.
Thank you, Mr. Nilesh. Good morning, everyone, and thank you all for joining us on this earnings call for the quarter 1 for the period ended June 30, 2020. As we mentioned in the last quarter, that the impact of external factors, that is COVID pandemic, will be visible in the result of Q1 and the same will materially affect in the quarter. During April and May 2020, revenues were impacted by the severe lockdown and restrictions. However, with the gradual lifting of lockdowns and easing restrictions, we could achieve the sales in June 2020 better than what we achieved in comparable months of the previous year. Coal production in Q1 was less than last year by 12% as most mining and construction activity came to a standstill. Both central and state governments imposed restrictions in manpower deployment and movement of goods and men in the mentioned period. Housing and infrastructure sector was grossly affected due to movement of migrant workers back home. Sales from exports and overseas have shown growth, giving us confidence of achieving our set targets in the sector. Though the impact of COVID was seen in countries like Nigeria and South Africa, but was offset by sales from Ghana. In a major boost for Make in India and Atmanirbhar Bharat, the first ever Pinaka rocket fully manufactured by a company, Economic Explosives Limited, have been successfully test fired by the army at the firing range in Pokhran, Rajasthan. It is for the first time in India's defense history that Pinaka rockets fully manufactured by private organization has been successfully test fired. Further, we are anticipating orders for the multi-mode hand grenade soon. While our business continues to be profoundly impacted by COVID-19, we are seeing steady signs of demand returning in all the countries where we operate. With expected boost from revival of the economy and turnaround in our overseas businesses, we expect our revenues and margins in second quarter 2021 likely to be maintained when compared to similar quarter of the previous year, despite the severe impact of COVID. We will keep a watch on how the COVID-19 situation pans out and its impact on us, while we will not shy away from investment in any opportunity which gives us a strategic advantage. That being said, it will still be challenging to predict the growth numbers for the subsequent year. We do target and anticipate the top line to cross last year's numbers, but on a conservative side, COVID-led uncertainties can impact demand from mining and infrastructure in India, and as a result, we may see a slippage by about 5 to 10%. Over to Mr. Nilesh.
Thank you, Mr. Menon. Friends, now I am pleased to be here to provide an update on our business and financial performance for 3 months ended June 30th, 2020. The world has changed drastically over the last 6 months, an evaluation that may previously have taken years or even decades to occur has been accelerated into matter of months. While we continue to live in a world of volatility and relative unpredictability, our priority remains to ensure that the business continuity and accelerate through the recovery process, moving on, looking forward to retooling to a new normal that is going to emerge post-COVID-19 scenario. This quarter was an extraordinary period which faced severe lockdowns in the country and some parts of the world due to spread of COVID-19 pandemic across the globe. So this quarter cannot be compared to previous year's same period due to obvious challenges pandemic brought. It is not only affecting human lives, but the company's top and bottom line as well. Now let's quickly review the quarter. The revenue for the quarter is down by 20.79% year-on-year basis, that is from 620.03 crores to 491.14 crores, impact of rupees 129 crores approximately. The domestic volumes in the quarter are reduced by 24%, that is 70,287 metric tons compared to 92,531 metric tons. The realization of explosives is down by almost 7.39%, that is rupees 34,238 per ton compared to rupees 36,969 per ton. The explosives revenue, as such the explosives revenue was down by 29.65%, that is from 342.08 crores to 240.65 crores, and revenue from initiating system was also down by 26%, that is from 82.30 crores to 60.89 crores. If you look how the sectors got affected, revenue from Coal India was lower by 10.4%, that is rupees 98.48 crores compared to 109.91 crores on year-on-year basis. Revenue from non-Coal India and institutional was lower by almost 32.24%, that is from 71.80 crores to 48.65 crores. Revenue from housing and infra in domestic market was down by almost 49.27%, that is from 211.47 crores to 107.28 crores. However, some positivity, export and overseas revenue grew by almost 6%, 5.95%, from 195.45 crores to 207.08 crores, and defense from revenue was almost similar, that is 23.46 crores compared to 25.24 crores, which we did in a comparable quarter of previous year. When we look at raw material, the raw material consumption has decreased by almost 2.49%, that is from 57.41% to 54.92% as a percentage of sales. This is due to fall in commodity prices, change in product mix and better realization from exports. AN price in Q1FY21 was 25,139 per ton compared to 26,335 per ton in Q1FY20, that is down by almost 4.54%. Coming to employee cost, the employee cost has increased by 1.49% and in absolute numbers has reduced from 52.43 crores compared to 48.84 crores on account of non-availability of workers due to COVID pandemic. Hence, reduction in contract workers also affected sales, thereby as a percentage of sales it is appearing on higher side. The other expenses has increased by almost 2.37% and in absolute number is 80.64 crores against 87.07 crores. However, on the account of lower sales again, the figures as percentage of sales look on higher side. The EBITDA margin for the quarter stands at 19.51% compared to 21.01%. The interest cost as a percentage of sales increased from 1.95% to 2.5%, again on account of lower sales. However, in absolute number, it is 12.30 crores compared to 14.42 crores, which was in our last quarter of previous year. So if we compare from the previous quarter, which ended on 31st March, and look at June quarter, it has reduced. Depreciation has increased from 19.51 crores to 22.79 crores on account of CapEx, which was done in previous year. The profit before tax stands at 12.36% compared to 15.92%. Now the current tax rate is 25% after the new guidelines. As such, the net profit in absolute terms is down to rupees 43.97 crores from 73.83 crores, that is 40.44%. Net profit margin is of 8.95% compared to 11.91% in similar quarter previous year. Few other details which we would like to highlight. The working capital days has reduced from 113 days to 91 days, mainly on account of inventory days, which has now become normalized and reduced from 74 to 99 days. However, the debtor days has remained the same, that is 59 compared to 60. The debt equity ratio is now 0.46 compared to 0.51. For the quarter, we did a capex of 48.78 crores, and for the year we have a planned capex of 210 crores. The total order book as of date stands at 1,153 crores, comprising of orders from Coal India to the tune of 710 crores, Singareni 105 crores, and Defence of 338 crores. Had the sales number were higher, these figures would have definitely been different. Now we would be happy to take any question, comment or suggestion that you may have. Back to you, operator. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sujit Jain from ASK Investment Managers. Please go ahead.
Yeah, Nilesh ji, hi. Menon ji, hi.
Hi.
And if Manish is there, hello. Two questions, you can note them down. The SGST benefit in packaging Maharashtra, when does it end? What was the MAS benefit in FY20 of the 72 crores other operating income? If you net off the standalone from console, the margins in the remaining business, that is X of standalone, are lesser than the standalone business, which actually kind of pulls down the ROC. We have done great compounding, and as well as 85 to 90% of our cash flow from operations have been reinvested. But what explains the loss in, for example, the 74% subsidiary in South Africa, 64 crores and 38 crores in FY20 and FY19? You have spoken in the annual report about ISRO business, how big that opportunity could be. And some of the entities that are there in annual report, which are promoter entities, are promoters, what kind of business they are into apart from this business, which is, for example, Gulmore developers, Sun developers, Sunbeam developers, etc. Thanks.
Yeah.
Okay. Let me take the question of overseas, particularly with subject to South Africa. Our views are like this. Solar is the only Indian company to successfully set up overseas manufacturing facility. If you look at the Solar's first 3 overseas plants, which is right now maybe between 6 years to 9 years, we have a market share there about 12 to 38%. In India, Solar has a market share of about 24%, and India's total market size is about $700 million USD. In Africa continent, In the countries that we are present, the market size is about $1 billion USD, and currently we are doing about 70 to 80 million USD. In South Africa, the market size is about 680 million USD. It is a known mining country where most large and small mining houses are headquartered. It is also the center of explosive business in Africa and a very well regulated and technologically advanced in mining. Solar has strategically positioned itself while entering into South Africa. We have built a world-class production facility in South Africa, which has been very well acknowledged by most mining houses in Africa. It also showcased our capability in building the world-class facility. While doing so, we have leveraged a world-class detonators into South Africa, underground mining market. Most of the growth for us in future will come off from South Africa. Therefore, we see a huge growth in the coming years. We have leveraged our presence in South Africa with the mining houses. The first fruit we have seen is the Anglo-American, which has given us a 3 years underground detonator contract. Now we see the second fruit that is coming in Ghana, where a large mining house has given us a 5 years contract in Ghana. So all these are based because of our base in South Africa. South Africa has a 680 million market size, so we hope to penetrate that market in going forward. Now,
The next question I believe was on the package scheme of MEIS, and you wanted to know about the standalone margin.
So the total operating income, other operating income 72 crores, how much of that was MEIS, FY20?
Of the other operating income, how much it was? 10 crores.
Okay.
Yeah.
Also about ISRO business opportunity.
About the ISRO business opportunity. So we will share that as and when, because right now we are in testing and product development stage. The moment we get the confirmation, we will update all the investors on that. So right now, as we have explained, that Pinaka is the opportunity we are looking, and the MMHG order which are going to come to our company. So those are the two areas where we are clear about.
And the other promoter entities not related with solar mentioned in the annual report.
Other
Promoter entities such as fund developers, Sunbeam developers. So just wanted to know what kind of businesses promoters are into apart from solar.
So apart from solar and explosives, the promoter are not focusing in any other business. We are totally into explosives.
Nothing related with real estate, infrastructure, etc.
No.
Okay. And the last question that I had asked about the scheme in Maharashtra, when does it end? The package scheme where you get SGST benefits.
Hello?
package scheme, when does it end?
The package scheme is valid up to?
It is valid up to May 2022.
May 2022.
Sure, thanks. I'll get back in the queue.
Yeah, and those companies which you are talking about, they are simply investment companies, nothing beyond that.
Yeah, thanks.
They are not related to explosives.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Kishore B, an individual investor. Please go ahead.
Hi, thanks for the opportunity. And sir, this is
Mr.
related
Kishore,
to the.
sorry to interrupt, but can you speak closer to the handset, please? Your voice is not audible.
Yeah, is it audible now?
Yes, sir.
Yeah, thanks for the opportunity. Yeah, my question is related to the net debt. Hello?
Yes.
Yeah, can you hear me?
Yeah.
This is related to
To come closer to your mic and speak a bit loudly.
Yes, I'm very close to the microphone and I'm speaking. Yeah.
Sir, still we are unable to hear your voice. You're not clearly audible, sir.
Now?
No, sir. Sir, we would request you to return to the queue once again.
Sure.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Santosh Vesalapu from Ashika Stocks. Please go ahead.
Sir, thanks for the opportunity, sir. First, I'd like to congratulate on the ongoing developments on the defense side.
Thank you.
It's been a long wait, and we get to hear now the ongoing developments, which are very positive for the company. I'll start, sir, first. Sir, excluding Ghana, what would be the revenue growth from the exports and overseas business? Second, sir, what is the status of the BrahMos propellants TOT absorption that we're working upon, and the 3 mines that we are working upon? The details, the names of them are put up in the presentation. And thirdly, what's the outlook of our realization going forward from the current order book? And what's the outlook on the ammonium nitrate prices given the current scenario? That's it, sir.
Mr. Santosh, you have asked few questions in one lot. First was related to the update on BrahMos and mines. So we cannot update on each and every product like that. But for your knowledge and everybody's knowledge, the company has already delivered the product and it is being successfully fired. As far as the overall business from Ghana and other sectors is concerned, we have already explained about the potential of overseas business, and that should take care of the individual section. And as far as the ammonium nitrate pricing is concerned, the prices are governed by the market dynamics, and like we have seen in many of the commodities, prices has fallen down and again has increased a bit. So the same thing will happen in ammonium nitrate also, if we believe the historical trends. Thank you.
Okay. Thank you, sir.
Thank you. The next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So just one question. In terms of the housing and infra, which had seen sharper decline on account of the lockdown impact, how are things shaping up over there? And also in terms of how is the competitive intensity in that segment?
So in case of this housing and infrastructure, as we had said, that because of this complete shutdown which we faced earlier, and now we feel that gradually post this monsoon from Q2 onwards, it should gradually pick up. And that is what we are expecting. So Q3 and Q4, we expect a better demand from these two sectors as well.
Okay. And sir, in terms of the debt levels, well, the debt has remained stable because our working capital has come down, but overseas has kind of seen an increase in overall capex. So how should one look at the debt levels over FY21 and FY22 end?
So the debt level will maintain that debt equity ratio of 0.5. So that we look forward to. And now the type of capex we have planned, we will see that most of you will be made through internal accruals and maintaining the same level of loans.
Okay. So, but the 250 odd crore kind of a capex run rate which we have been maintaining in 22, should that number come off, or will that continue, that thrust of capex of 250 odd crores annually?
So as of now, we do see that will be planned, but now, like we mentioned in our opening speech, that we will see how things evolve, how this corona COVID pandemic affects the globe and how it changes the market dynamics, and accordingly we will decide, take a call on capex.
Okay. But that will be mostly towards in defense.
No, that will be even for domestic, because domestic also we are doing a lot of capacity upgradation, technological transformations are there which are taking place, and coupled with our, of course, defense investment.
Okay. Okay, sir. Thank you so much for answering my questions and all the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Lokesh Manik from Vallum Capital. Please go ahead.
Yes, good morning, sir. Hello.
Yeah.
Yes, sir, I'm audible.
So there is a disturbance in your line. So.
Hello. Hello. Hello.
Yes, sir. Please go ahead.
Yeah. So I had a couple of questions. One was, sir, on the recent developments in the defense side with regards to 101 products where import substitution will happen. As I understand, we've invested in this segment over the past 7 years. So just wanted some further details in terms of do you see any new products coming up that previously we were not into and that side has opened up? And the current investments that we have made in the defense side would be sufficient to cater to the opportunity that is opening up?
If you have observed that the list is almost 101 items,
right,
and those lists covers items other than ammunition as well, right?
Right.
Those are related to hardware and ammunition both.
Right.
If you look at the ammunition items and if you look at the kind of disclosures we have been making in our annual report and quarterly conference calls, we have already clarified and we have already informed everybody that the company is one of the most integrated players in the field of ammunition. It means we have established the facilities to make high energy materials, pyrotechnic items, fuses, warheads, propellants, and complete integration of rockets and missile as well. It means that we already have built a capability to handle these products. And if you look at those items, we already have the facilities to do those or handle those products. And that is what we have been doing in last couple of years. So looking at the opportunities, we are ready to handle those opportunities. And as the volume will pick up, say from start or trials to the commercial production orders and further ramp up, we will also have to ramp up our facilities in tune with that. But as of now, what I can say is that we have a complete facility to handle those products and we are ready for that.
Okay. So just one last question. Our corporate structure is a bit complex in terms of subsidiaries, number of subsidiaries and step-down subsidiaries. So is there any plan to simplify this structure and what would be the rationale for so many companies?
We have not studied from that angle which you are referring to. But we will definitely relook into those kind of things. And as and when time comes, we will do the further demerger or merger activity in those subsidiaries as per the need and the requirement of the business.
Right, sir. It becomes much easier to analyze the company then.
Sure, sir.
That's it from my side, sir. Thank you so much.
Thank you. The next question is from the line of Siddharth Mota from Principal India. Please go ahead.
Yeah. Good morning, sir. Sir, I've got two questions. The first one is on the Pinaka. As we have successfully tested our materials. So what does it mean in terms of opportunity size, and have we participated in any tender related to it?
Pinaka, as you must have read, that this was the first time in the history that any private sector company has manufactured and those have been successfully test fired. Now, this definitely opens a huge door of opportunity for us supplying them to defense. So now as of now, they have placed order related to hardware with all the companies which you must have read, and soon 6 regiments, so they are trying to build up. For that, the required hardware for Pinaka, they have already placed order. And definitely soon, within another span of 6 months, you will see that some orders will come for integrated Pinaka rockets. Inquiries will start coming in.
Okay, sir. And sir, would it be possible, sir, just to give the range, what what can be an order size, whatever it is, whatever best visibility that you have for the two hardware that we have bought after 6 months, which we are, which may come.
Like Mr. Nilesh has said, that inquiries are expected to come. Once inquiries comes in, we can respond to this kind of question, please.
Yes. Okay. Sir, regarding this multi-mode hand credit, where price finalization it has already happened.
Hello.
Yes.
Mr. Mota, can you speak closer to the answer, please? Seems like we lost the connection for Mr. Mota.
Okay.
A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Sunil Jain from ASK Investment Managers. Please go ahead.
Yeah. Am I audible?
Yeah, you are audible.
Yeah. Sir, if you can explain, which you've mentioned in the annual report, the Center of Excellence of Life Assessment, how it helps us in terms of, having incremental revenues, etc., especially in explosives and ammunition. Also, a question is on the now the French part of the family, which I believe was handling the institutional business development responsibilities sitting in Rajasthan. So who is taking care of that portfolio? And they still have a large stake. What if they demand a board seat? What would be our response? Thanks.
Firstly, I would like to say on the percentage holding which they are holding, that is around 28%, which they will continue to hold. As far as the part is concerned, basically it was an automatic vacation from the office, so that is what their concern is. So a legal thing is going on that, and as the matter is sub judice, as and when it will come, we will take the best course of action. Now, as far as the part of business which he was looking was basically from Bhilwala, so under him he already had a professional team which was looking after that. Now, Mr. Menon, who is there with us as Executive Director, he will be managing that. So that will continue without any interruption. Thank you.
Yeah, and I've asked you about the Center of Excellence of Life Assessment. If you can elaborate on that, which you've opened recently.
This Center of Excellence for Lifetime Assessment is basically the country has observed over number of years that in our country there is a lack of capability to see the life of the ammunition. So we rely on the certifications of the vendors who are supplying the products from overseas countries. So once the product comes to the country, after certain years, if because of any one part or other part, if the life of the ammunition can be predicted, then country can save thousands of crores every year. So based on that requirement, company came forward and set up this Center of Excellence. It will help our country a lot. As far as revenue is concerned, the establishment is not from that perspective, but to help the country, and that will benefit everybody. Thank you.
Thanks.
Thank you. The next question is from the line of Pankaj Bobade from Axis Securities. Please go ahead.
Thanks a lot for taking my question. Sir, I have two questions. First is regarding defense. How do you see this business? I want a broad color. How do you see this business over next 3 to 4 years or 5 years? Whether it would be comparable to our current core business, and what would be the margins in that segment? And second question would be, so with mining opening up for private parties, what type of business opportunities do we see?
Let me answer the second question first. And this is with the private mining that's opening up, coal mining opening up for the private sector. This is part of our overall strategy of the country reaching 1.5 billion tons of coal production. So we are well geared for that. I think we have a fairly large contract already in place with lots of private mining parties. So we are well prepared for that. So there is opportunities that is going to come up in that sector. Now for the second.
So when we talk about the defense business, yes, it is a long-term business and the product really takes a long time to get qualified and stabilized. But if you look at the delays in starting the releasing of RFPs and finalizing, so over the years, earlier there was no policy in place to buy ammunition from private sector. Second, the real push was not there, but with the recent policy in place and with the push there for Atmanirbhar Bharat, the government has taken various measures, like any import of ammunition, if it is 200 crore, the government has straightforwardly announced that they will not be importing that if it is beyond this limit. And then that will definitely open a gate of opportunity for players like us. And as has been explained few time back by RMD, that we have so many types of ammunition, we have such an integrated plant that we can, our company will be in the best position to take care of to take away that opportunity. And these various items which will be required by the services, we will need a very small capex in the nature of 40, 50, 70 crores to be ramped up from here onwards. So let us see now how government, what their plan about defense, how they come out with various inquiries. We will be definitely participating in all those and get benefit of these things. As far as once order starts flowing, then we can give you the like multi-mode, which is as we said is coming up. We already have an order book in hand. So a gradual period of years, over the period of next 3 years, we see a very good ramp up in our revenues from defense. And we will keep updating you, probably more clarity in the next conference call which we'll have for Q2.
So the margins in this new business are they comparable with the old core business? And second thing, how do you see this ramping? Do we see the revenues from the new business as good as the core business over say 4 or 5 years?
So defense, is a long gestation period. Is there in defense? So definitely and it's more capex oriented, long gestation. So definitely EBITDA margins will be better than the explosive margins.
Okay.
So definitely we expect the margins will improve going ahead once we have revenue flowing from defense.
So could you be able to give a trajectory, because we have been this, as you said, this is a long gestation period.
Right now we are doing around 21-22%, and we say there is an improvement in that. So you are asking for EBITDA or you are asking for trajectory?
Scale. We have been doing this for we have been investing for last 7 odd years. And as you said, it is long gestation period. I very well take that into account. But going forward, say next 5 years, do we see the scale of the business being ramped up to the level as it is as our core businesses?
No, our core business, we are there in Indian market and overseas market. So that will also grow. So we can expect that out of this total basket, 40% will be our Indian market, maybe 40% of domestic and export, and balance 20% from the defense.
And so the basic question from your side was that how defense business will reflect in the overall business of the company. So let me clarify you that since we are making explosives, for us, making explosive means we can handle the product for civilian and defense applications both. Over the years, we have expanded the product portfolio even in civilian explosives products, and recently over last 7 years we have expanded into defense products. Going forward, the same kind of experience will help us to expand our reach for the products like
space related requirement also. So if you look at this kind of diversification within the same explosive family, it means that company is expanding its geographical reach, company is expanding its product portfolio. That will help the company to sustain any kind of situation, and that will enhance the sustainability of the company. And that is the strategy behind all these diversification within the same explosive segment. And going forward, definitely, like we have been saying, that defense will become one of our major contributing product for our overall business portfolio. How much it will contribute, that is difficult at this moment, but as government is very clear that they want to implement the practically 100% indigenization, as good as 100% indigenization, and because of that policy push, they have came out with the Atmanirbhar Bharat scheme, and they have very clearly spelled out that so many items of ammunition will be procured from India. So those kind of policy push will definitely help our company to contribute for making our country self-sufficient in ammunition. And once we reach to that stage in next couple of years, as we have already started exploring the sales of these products for the overseas markets also. So this is a journey which will definitely unfold in the years to come. So we have to wait for those kind of total clarity, because it's a evolution of the business. Thank you.
Sure. Thanks a lot.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Siddharth Mota from Principal India. Please go ahead.
Yes, sir. So my question is on this multi-mode hand grenade where price finalization has happened and soon order is going to be finalized. So can you please quantify the order size and the execution time? And is there any follow-up order on this MMHG? That is a phase 2.
We can share the information like this. The order which is going to come is for almost 1 million piece, 1 million, 10 lakh pieces. That needs to be delivered in a period of 2 years from the date of order. Second, the price for this product, it is difficult to share at this moment. Just wait for another couple of weeks, we will share with the investors. As far as the follow-up order is concerned, because since it was for the first time that our company has really made it successful after almost more than 22 years of research on this product. So once the product starts flowing into the army soldiers, definitely more orders will come up. That is what is our expectation. Thank you.
Okay. Sir, regarding this Singareni order, re-tendering was supposed to happen in June 2020. So any update on that front?
So the Singareni tender is already over, and we are since the orders will be in that stage. Once orders come, we will share with you.
Okay. And would it be possible for you to quantify the order which was there this time?
It will not be wise on our part to share the order quantity at this moment, but definitely orders will be more than the last tender.
And might be in a month or so we can hear something on this front?
We are expecting that within a month's time we should get an order. But because of COVID situation especially in Singareni collieries, mines and offices, they are not working at the same speed at which they were working at.
Okay. Sir, South Africa, our loss was around 55 crore in FY20, and you have mentioned that we have won some of the contracts. So, what can be the quantum of loss or profit might be in FY21 and 22? And the same question is applicable for our new facility, Australia and Ghana.
What I can share at this stage that as far as South Africa business, Mr. Menon has already shared the intent for which we have entered into the market. If you look at an opportunity, the initial year where we have really lost a big amount in that subsidiary, but as per the current order book and execution stage, we are confident that in this year we should reach to a break-even level. And Ghana we are already operationalized, so definitely in this year itself we will see profit. As far as Australia is concerned, once production starts, so then definitely we will reach to the
break-even level within a period of 6 months. That is our expectation.
Okay. So the loss which was seen in the South Africa, it would not be repeated in Australia and the Ghana, because we might have also done from our experience in operating overseas entities.
Like we have been sharing that every geography has its own unique challenges. Otherwise, we would have replicated the same Indian experience with the South Africa also. We were already there in Zambia, Nigeria, and other parts of the world like Turkey also. So every country have its own unique challenges, and the basic thing is that we are into explosives. Our vision is very clear, and we have to be there in practically all parts of the market, which gives an advantage to remain or become a major global player in the market. So based on that vision and strategy, we are entering into those markets. So like we have also seen the similar experience in the Turkey also, that initially for 2-3 years we were making losses, and then the company and the country started giving us good results. Similar thing we will see in South Africa also. We have to have some patience to see the fruits coming out of our investments and the effort we have been done in last 3 to 4 years time. We will see the positive results very soon.
Yeah. So my final question is that you said the break-even in all the 3 entities. So I assume it is at the PBT level, or it is at the operating profit, which is EBITDA?
I cannot share the break-even level for each country.
Okay, sir. Okay. Thank you.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead. Seems like we lost the connection for Mr. Rohan Gupta. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Sujit Jain from ASK Investment Managers. Please go ahead.
So we mentioned about 450,000 tons of capacity and production of 435,000 tons in the annual report. And in the Q4 presentation, we talk about close to about 335,000 tons of sales. So if you can reconcile these numbers, what is our capacity split into domestic and overseas, and what is the capacity utilization?
Okay. So we'll take the next question till we give you this figure.
Sure, thanks.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir, good morning. Hope sir you can hear me now.
Yeah.
Sir, couple of questions from my side. Sir, first is on our international operations. So given the uncertainty of COVID, earlier we had planned almost entering to every new country, almost 2 countries every year. Have we seen any strategic plan in that current year and over next 2 years, how our global operations will pan out, sir?
Rohan, we have already shared recently in this conference call itself about South Africa, Ghana and Australia and Tanzania as well. I think that should suffice your question.
No, sir. Sir, when we enter into any new country, we have been planning almost 1 year in advance. So I am just saying that over next 2 years, are we going to continuously add new countries over next 2 years, or there is going to be some slowdown in our international operations when adding a new country, sir?
So basically, you are mixing both questions. First is, are we going into new countries, and or we have slowed down our efforts? First point is, what countries we have already shared in that our target is already there, efforts are already going on, where the targets or countries are identified. So we are continuing with those efforts. But major point is the investments, which were high in nature, especially for South Africa. That phase is, I can say, is almost over.
Okay. So as you sir mentioned that South Africa from this year onward we can expect break even, and Australia also maybe over next 2 years, can be brought back to break-even. Is that right? Because after that, probably all other countries, we will be on a break-even point, right? Or on the profitability zone.
Absolutely. And another factor we should keep in consideration that once we enter into different level of market, which Mr. Menon has said, that we have entered into the advanced market as far as mining is concerned. Once we are through from that phase, definitely we need not to relearn the same thing again and again on that kind of requirement, say product requirement, service requirement, or cultural related issues. So we will be out of all these three new things which we have to feel or pass through when we enter into big new mining markets. So those learnings and experience and the reputation which we have recently built even in South Africa, that will definitely help us a lot.
Sir, that was exactly my question, that in last 5 years our learning curve has stepped up a lot. So over next 3 to 4 years, given these major countries we have already covered and most of them now above break-even, so can we expect a significant jump in profitability over next 3 years from all these countries where we are already in? That's what my question was, sir.
You are very right. Once we are out of that phase, which we have already shared, that in this year we will see a significant increase in top line and bottom line from overseas market despite of the COVID-related challenges. And definitely you are right, we will see the similar improvement in coming years to come.
Okay. Sir, second question is on defense. So similar thing has happened in defense as well, because our huge investment has gone there, but we are still struggling with the lower revenues, that none of our fault, but continuous delays in government orders. Sir, do you see that in last 6 months, given the escalating border tension and government focusing continuously more on Atmanirbhar Bharat, do you see that something has changed in last 6 months where we continue to see, sir, more RFPs are coming in, but when it comes to the order inflow or getting orders converted into revenues, that is not happening. So do you see, sir, that over next 1 year, 1.5 years, now the time has come where this defense business is now ready to take off significantly?
What I can say that there is a positivity as far as sourcing of ammunition from indigenous sources, indigenous suppliers. But same thing, I would also like to submit that in the past years, we have seen there was no policy in place to buy the ammunition from private sectors. If you look into both the sides and the kind of preparations which we have been doing in last 6-7 years, so at this stage, we are ready, government is also ready with the policies in place, and there is a special push under Atmanirbhar Bharat. So these three things if we combine, we will see definitely bigger pie of buying ammunition from private players in India. And that will definitely help us. As far as whether significant or not significant, I can say that one of the orders, which is multi-mode hand grenade, it will be the first time from Indian private players that government will buy the ready-to-use ammunition. And once this starts, it will reflect the government intent also. And once it starts, definitely we will see more clarity on various other products also.
Okay, and just last one, sir, third one. Sir, on CapEx, so this year you had roughly 200 crores. So going forward over next 2 to 3 years, because you mentioned that you want to maintain debt equity of 0.5x, given our solid cash flow generation from the global operations, so it means that, and with our balance sheet size growing, it means that we are looking at large capex going forward. I just wanted to understand that over next 2 years to 3 years, what will be our cumulative capex and which part of the business it will be?
We will share on these issues as and when time comes. Otherwise, our policy is very clear. We do our business by maintaining the financial position in a conservative manner. And we believe debt equity ratios around 0.5 is a very good reference benchmark, and we will keep exploring the opportunities by maintaining few of the basic benchmarks. Thank you.
Thank you, sir.
Thank you.
Yeah. Now I would quickly like to answer Mr. Sujit Jain's question. What we had mentioned in the annual report, the total production of 4,37,500 was our global production of explosives, which we did. But in the domestic market, we did a production of 3,37,000. Our domestic production capacity is 4,50,000, and our overseas capacity is 1,27,000. So that makes us 5,77,000 as our global explosives capacity. So I hope it clears it to us.
Thank you. We take the last question from the line of Santosh Vesalapu from Ashika Stock Broking. Please go ahead.
So thank you for the opportunity, sir. Sir, Manish sir, I just wanted to understand what are we facing any specific challenges to pursue a $6 billion kind of an offset obligation that is to be met yet? So are we facing any challenges in pursuing this opportunity? It means a lot can be doable there given the pricing dynamics in favor of us. What stops us from pursuing this opportunity? Just understand if you could throw some color on it, please.
Yeah, so definitely offset policy is there, but this offset policy will come when there are foreign suppliers who are willing setting up a JV, and for that they will need to transfer the technology and share their production facilities. So there are a lot of not only company level issues, but government level issues and global political issues which are there concerning to this. So as we have said that all these things to get a clarity to set up policy. Santosh, you have been tracking defense so well, and from last 7 to 10 years you have been associated with two major companies who are working in defense, and you have shared with us so many thoughts on this and have been really telling us how things are moving. So you are very well informed that earlier when we started, there was no policy at that time whether private sector can supply to defense or not. So from there the journey started. Then there were obstacles like single party which was there a supply. So that got clear. Then you are well aware that there were so many product qualification and validations which need to get. So how long it takes. Then you are well aware that we didn't have since you were importing all this, so it was all, we didn't have the testing facility. We didn't have the life assessment center. So, over a period of time, it has taken the policies and steps to reach at this level. So, this is how the defense business have evolved. And now, we are seeing a clarity in few of the products where we have worked over a period of 7 years and got this supply chain in place and received the orders. And even after receiving the orders like we had, they asked us to defer the delivery schedule. So, all these things till now they have given that less than 200 crore contract. They should, if there is an Indian capacity, they should buy from India. But the defense requirements are huge. So, normally they will come in, let us see which segments that comes into play. Then they have now banned 101 items, but that is over phases. So, even they have their contractual obligations with those suppliers or vendors from this thing, and so everything will take and happen at an appropriate time. And now as we said that for multi-mode hand grenade for the first time, the contract rates, everything is finalized, quantity is finalized, contract terms are finalized, and within 2 weeks we'll get that, which we'll share with you. And even the Pinaka rocket, the technology has been so this thing, and we got the technology transfer. We developed the same with the help of DRDO, and it was mentioned that all 6 were successfully test fired and hit the target. So now let us wait and see how the government goes ahead, what item they are trying to take, where their 1,000 billion will get offset. So as and when the clarity comes on that, we will definitely share with you, and we are in the right position, well placed with the best integrated facility anyone could have to take advantage or to get benefit of this opportunity which is open for us.
Okay. Sir, I had one small request. the way we put the order book details for the Coal India, for Singareni and for the defense, now that we are having such a wide presence in the international market, I would request if you could share some order book numbers for the international markets consolidated. That should give some color to us quarter and what's happening on the international market.
Here what happens in domestic market now, we have a clear-cut tender of 2 years from Coal India, we have a clear-cut tender of this from Singareni. Similarly, we will look, so if we have such fixed tenders in all the things, as we have suggested, we'll definitely consider that, and we will start seeing that from next time that what orders we have from this outside countries plus export.
Thank you, sir. Thanks a lot. That's it.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Chirag Muchala for closing comments.
Yeah, we thank the management for taking time out and sharing their valuable insights on this call, and we also thank all the participants for their presence. Sir, do you have any closing remarks?
So we would just like to thank all the investors and our stakeholders who are there for attending this call and hearing to us and giving us suggestions and their valuable guidance, and we assure that your company will take all the right steps to ensure what is most beneficial in the interest of all the stakeholders, and we will do our best to reach to the performance which is expected out of us. Thank you so much.
Thank you.